I've been trading for over 5+ years and have made over $500,000. And every single trade that I take starts off with understanding where liquidity rests in the markets. Chances are when you first start trading, every time you enter into a trade, it seems to perfectly stop you out right before it shoots to your target. And the most frustrating part is that you were right, but you ended up losing money. So in today's video, I'm going to simplify liquidity, how you can use liquidity in the markets, and how you can implement liquidity into your own trading to make consistent profits. So understanding liquidity is very important when it comes to trading in the markets. And what liquidity refers to is the ease at which an asset can be bought or sold. So whenever we trade in the markets, what we need is what's called liquidity. And essentially, in the most simplest terms, liquidity really means just where is the money lying in the markets. If you can understand where the money is lying in the markets, then we can either look to take trades up into that area or look to sell in those areas. So the main thing is understanding where the money is in the markets. And if we can understand where the money is in the markets, and also what we understand is that whenever we have a buyer, what we have is a seller. So whenever we take a trade in the markets, someone is taking an opposing trade in that opposite direction. This can be a retail trader, this can be institutional money. Whoever is fulfilling our orders, right, either buying or selling, there's someone else on the opposite side of the markets. And really, there's only three types of liquidity that can be deployed in the markets. And this comes from one of three things, being entries, stops, or take profits. So whenever we enter in the markets, that's a form of liquidity. Whenever we get stopped out of the markets, that's also a form of liquidity being deployed. And of course, when we take profits, we're looking to take liquidity from the markets. So with the basics of liquidity down, let's go on to where is liquidity resting in the markets. And understanding where liquidity is resting in the markets is very important. As I mentioned in the last slide, if we can understand where liquidity is resting in the markets, we can look to take our entries, our stops, our profit targets. We can look for plenty of opportunities around these key areas. So the first thing that we're going to be looking for is external liquidity. So what I consider external liquidity is liquidity that's not inside its current dealing range. And majority of the times when we're intraday traders, we're looking for previous day highs and previous day lows. So what we're looking for is liquidity resting above previous day highs and below previous day's lows. So these are where key levels of liquidity are resting, which is above and below your previous day's highs and lows. The next one being old highs and old lows. Look left for old highs and old lows for targets. Liquidity rests above and below those key levels. So if we're not looking for your previous day highs or your previous day lows, what we're going to be doing is looking left to look at really the third one, which kind of coincides with the second one, being higher time frame key levels. So key levels I can see on the multiple time frames, the weekly, the daily, the hourly. This also coincides with really your old highs and old lows. So these two are essentially together, right? Old highs, old lows, higher time frame levels. These are essentially the exact same thing. And what we want to do is look left for those higher time frame objectives. And we know that liquidity is resting above and below those key levels, being those higher time frame key levels where there's multiple touches, right? Those old weekly levels, those daily levels. That's why you see price always gravitating back towards those levels, because what's resting there is what's called liquidity. So now we can go and see what liquidity looks like in the markets. So what does liquidity look like? So liquidity can come in forms of three ways: equal highs and equal lows, trendline liquidity, and range liquidity. First, let's start off in equal highs and equal lows. As you can see here, what we have is two equal highs. We have two equal highs here. What's built up above these highs, it's what's called liquidity. A lot of times whenever we have equal highs in the markets, we usually like to seek that liquidity because you know there's going to be some type of orders resting above those levels. Same thing with equal lows. As you can see right here, what we have is equal lows. A lot of times what will happen is price will usually gravitate back down towards those key levels because we have liquidity resting below those equal lows. Next, what we have is trendline liquidity. Whenever we have a trendline, this comes in form of multiple touches. I like to use at least 2 to 3 touches, and you'll see a lot of times whenever you have a trend line, price then breaks through the trend line and gravitates back towards the downside to take out the key objectives, because what we have is called trendline liquidity, and there's a lot of liquidity resting below those highs and lows. and price usually likes to take them up. And finally, what we have is range liquidity. So range liquidity essentially refers to the range that we're in between the key support and resistance levels. When we're in a range, a lot of times we're taking out the high and low of the range. We're coming back inside of that range slash consolidation because what we have is range liquidity, and it just likes to take out both highs and lows of the markets. So now let's go on to a little bit more detailed explanation of what these look like. So now we're back on the line chart, and I really want to talk a little bit more in depth of what equal highs and equal lows looks like. So right here, you can see what we have is equal highs, right? We're in an uptrend, higher lows, higher highs. What we have is equal highs right here at this pivot high. So whenever we have equal highs, what's resting above these two highs is what's called liquidity, right? This can come in forms of buy stops, right? This can come in forms of sell orders, but all we know is that there is liquidity resting above this key level. So a lot of times what will happen is price will look to trade back up in towards this area and take out the liquidity above these equal highs. So if we understand that price wants to gravitate back towards these equal highs, we can look for a trade up and towards this equal high, or we can wait for the break and retest of these equal highs for that continued push back towards the upside. So if we go on to the equal lows, as you can see as well, right, we're in a downtrend, lower high, lower low, lower high, and what we form is what's called equal lows. So we have equal lows, as you can see right here. What's built up underneath these equal lows is what's called liquidity. So if we understand this, price is going to want to gravitate back down towards this key area. As I mentioned, we could potentially look to take a lower high in towards this key area, or we can wait for, as I mentioned, the break underneath this key area, a retest of these equal lows for that continued push back towards the downside. So whenever we have equal highs or equal lows, we can look to take trades up and towards those equal highs and equal lows, or we can wait for a break above or below and look for the retest of those equal highs and equal lows. So now let's go on to trendline liquidity. As you can see, the next one I want to talk about is trendline liquidity, and we're making a low, higher high, higher low, higher high, and what we have is what's called a pullback. So you can see in this case, we're pulling back, we're creating a mini downtrend here. We're creating a mini downtrend in a macro uptrend. So you can see in this case, price is really just coming right back down and towards our key break and retest level. So you can see we have this downtrend line on the lower time frames, and we can mark this out. So we can mark this trend line towards the downside. So we understand that we're in a clear uptrend. We have a pullback down in towards our key break and retest level. We form a trend line, and what happens whenever we form a trend line, what we're creating is essentially lower highs. So we're creating lower highs, but what's above these old highs is what's called liquidity. So we have liquidity above every single high that we've put in. So whenever we have this, we're just building up liquidity for a fuel move really back towards the upside. If we can break structure, hold these key levels, this would be a bullish signal for price to really gravitate all the way back towards this key high, which would have been that final target. So if we understand this, what can we look for? If I clear this chart right here, we can mark out our clear break and retest level. What we're going to be looking for really is all these liquidity levels being built up back towards the upside. So on the lower time frames, what we're going to be doing is looking for a break of structure back towards the upside for that continued push back towards these highs. So let's say this is the 1 minute. And this is the 5 minute. What we're going to be doing in the markets is waiting for that break of structure, a retest of this key level, and that continued push really back towards these highs all the way back here, which would be that key level. So this is a great example of trendline liquidity. Whenever we have a trend line in the markets, what we have is built up liquidity, and when we break that trend line, we're going to be looking for trend line liquidity. So now let's go on to the third type of liquidity, which is range liquidity. So the third type of liquidity is what's called range liquidity, and essentially what range liquidity is when price is inside of a range. So price is inside of a range. As you can see, these are our key lows, these are our key highs. And what usually tends to happen in range liquidity is price likes to take out the liquidity above these highs and then come all the way back towards the downside, sweep out these lows, and just come back inside this range. So this is what's called the range liquidity. A lot of times what will happen is that we'll end up taking the range towards the upside, fake out all the people that are trying to buy the breakout towards the upside, and they'll come back towards the downside and do the exact same. Fake out all the sellers that are trying to sell short towards the downside, we trap them, and then we come back inside the range. So this is what's called range liquidity. The only way I personally play range liquidity is when price creates a high and a low, and what we have is a break above the range with strong displacement, and then we have a retest of this level for that continued push towards the upside. Or if price breaks back underneath the range, right, strong displacement, a retest of this level for a continuation back towards the downside. And the way to look for range liquidity, as I mentioned, is we need a break with strong displacement, and usually this comes in forms of higher time frame thesis, right? This happens on the higher time frames. If you can get a breakout on the higher time frames, that's usually a good indication if price is going to break outside of the range. Is first higher time frames, candle confirmations, displacement, and price action around the retest levels. So with this being said, let's go on to some examples that I have for us. So as you can see right here, what we have is the Nvidia chart. What we have is equal highs. So if equal highs in the markets, and what's resting above these equal highs, as I mentioned, is what's called liquidity. So we have a lot of built up liquidity above these equal highs. So what I'm expecting price, right, as you can see right here, we're forming these higher lows. What I'm expecting price to happen is we have a big push towards the upside if we can break above this key area, which is our 502. And you can see the very next slide, price broke above these key equal highs, and what happened? We had a monster push towards the upside, and I was able to capture this retest on the lower time frames, but this was based off of a higher time frame thesis, right? We knew that we're bullish, we had clear equal highs, and we expected price to continue higher if we broke above your equal highs, and that's exactly what we did. Another example, as you can see right here, what we have is equal lows. We're on the NQ, and what's resting below these equal lows is what's called liquidity. And whenever we have these equal lows, price is going to want to gravitate down towards these equal lows and take out the liquidity that's resting underneath these key equal lows. And you can see price gravitated down towards these equal lows, taking out the liquidity right here, pop back up, and then we headed more towards the downside for a confirmation of this move lower. Next, what we have is trend line liquidity. As I mentioned, as you can see right here, what we have is this trend line. Right, whenever we have this trend line, what we have is built up liquidity. So we have a lot of built up liquidity on the NQ. So whenever price does want to move back towards the upside, we're going to have a nice push back towards the upside because there's a lot of built up liquidity. As you can see, we're putting in those lower highs. So if price is bullish and we break structure back towards the upside, which we did, we're going to have a nice push all the way back towards these highs, just due to the fact that what we have is liquidity being built up towards the upside. As you can see here, this is an example on Tesla. What we have is liquidity being built up towards the downside. We're forming this downtrend, and you can see right here, we have multiple touches. So we have 3 touches. If price wants to break underneath this trend line, there is a good chance that price continues towards the downside because we have liquidity being built up. And as you can see right here, once price broke underneath this trend line, the key levels were these key liquidity levels being these key lows, and price ended up gravitating towards the downside because we had liquidity resting underneath every single low, as you can see right here. So let's go on to range liquidity. And as you can see right here, what we have is range liquidity. And you can see every single time price makes a new high, right, peaks above it, rejects off this level, and then gravitates towards the downside, right? The downside takes out the liquidity, fakes out the sellers, and then gravitates back towards the upside, takes out this high once again, fakes people out, and then gravitates all the way back towards the downside, right back towards our key area, and then it gets bought up and then moves back inside of the range. So this is what's called range liquidity. As I mentioned, the only time I'm looking to play range liquidity is when price breaks outside of the range with strong displacement, and we either get that continued push towards the downside, retest, and continuation, or price break above, retest, and they have that continuation back towards upside. So with this being said, let's go on to the trading view chart, and let's go over some examples in real time. So right here, you can see that we're on SPY. The key level that I have marked out is this 174. You can see this previous support turn into resistance. We're getting it back above this key area now. So we'd like to see this area be used as support. And the key areas I have marked out towards this upside are these key equal highs all the way back up at 485. and of course this key high marked out as well. So looking at this chart, what we're going to be looking for is a potential trade opportunity up into this 584 level, or we're going to be waiting for that bigger time frame break above this 585, a retest of this level for that continuation back towards the upside. So if we understand that this is where the liquidity is resting in the markets, we can look to either target these areas or we can look to use these as potential entry points. So let's play the tape out on SPY. So as you can see, coming into market open, we have that big push towards the upside. We're breaking above these equal highs. We're breaking above our key level as well. So we broke above this key area of resistance where all the liquidity is resting. Now what we'd be looking for is the retest of this level for that continued push back towards the upside. So now we can go on to the lower time frames. So as you can see, we're on the 5-minute chart, and based off of our higher time frame key levels, where we're going to be looking for potential trade opportunities down in towards this 585, 586 key area for a move back towards the upside. So we can play out the tape here. So within the first 30 minutes, you can see price is now gravitating right back towards the downside. As you can see, right, this is going to be the exact area that we're going to be looking for that continued push back towards the upside. So now we can go into the 1-minute time frame. So right here, you can see we just broke structure back towards the upside. We have a lot of displacement as well. So now what we'll be looking for is a retest of this 586 for that continued push back towards the upside. So now you can see we have a nice reaction off the top of our break and retest level. So now we're going to be looking for that reversal play back towards the upside on this SPY. This is where I look to get in with a stop just to break below, and I'm looking to target your opening candle range, your high of day, and your pre-market high. So I can drag this all the way back towards the upside and mark out the key levels. We can now go back onto the 5-minute time frame since this is based off the higher time frames. And you can see right there, price ended up hitting all 3 profit targets. I took some scales right here and I ended up moving my stop to break even. Almost got stopped out on the remaining contracts in my position, but I ended up holding this key area that I bounced off from the first time. And then we ended up having a nice move back towards high of day and then your pre-market highs. And of course, SPY also had continuation above as well. So this is a perfect example of understanding liquidity on the higher time frames and using that liquidity area as a retest for that continued push back towards the upside. So now let's go on to the second example that I have for us. So right here, you can see I'm on my second example and we're on NVIDIA. As you can see, what I have drawn out is this trend line: 1 touch, 2 touch, 3 touch, 4 touches, 5 touches. So we have a lot of touches on this trend line. And now you can see we're trying to break out on the 1-hour time frame. So what we'll be looking for now is the retest on the lower time frames for that continuation move back towards the upside. So you can see that coming into market open on the lower time frames, we're trying to break above this 5-minute opening range. You can see on the very next candle, we're breaking above this key area. So now we can go into the lower time frames. So right here, you can see we're on the 1-minute time frame, and the key levels I'm going to have marked out now is your order block and also your 1-minute and 5-minute opening range. So I can mark out this key area, drag this over, and now what we're going to be doing is looking for this area to be used as a retest, right? The trend line retest, your opening range retest, your order block retest, right? This is a high probability area for NVIDIA to gravitate back towards the upside. So you can see that price is tapping in towards this key area. Right here, this is our confirmation candle that price wants to gravitate back towards the upside. You can get in with a stop just to break below. In this case, right, we can either look for high of day. In this case, it's only a 0.9 risk reward ratio. So we'll look for a 2-to-1 and continuation towards those higher time frame levels. So if we zoom out a little bit here, the key levels I can have marked out. In this case, you already hit your previous day highs. So you can mark out the next key levels, which is your 139 and then your 140 towards the upside. So we can drag this over and move this back towards the upside and play it out. And you can see right there, price ended up hitting our first key area, also hit our 139, and most likely I would have ended up getting stopped at the rest of my contracts once it broke back underneath this 139.82 key area. This is a great example of the trend line on the higher time frames, and then we go into the lower time frames to look for our entry models, in this case being the 1-minute opening range, right? We also had a 1-minute order block. We also had a retest of the trend line as well in the higher time frames, and then we're looking to target those external levels back towards the upside. So now let's go on to the final example that I have for us today. As you can see right here, we're on my final example, this on SPY. You can see we're clearly inside of a range, right? We're making highs, we're making lows. You can see every single time price comes near these lows, right? We're sweeping these levels, reversing back towards the top of the range. And once we get towards the top of the range, right, we're reversing back down in towards the middle of the range and the low of the range as well. So if I'm looking to trade range liquidity, what am I looking for? I know that there's liquidity built up to both sides of the markets. So what would I be looking for on the higher time frames if I'm going to look to trade this? I'm either going to be looking for a break underneath the range with displacement, a retest of this key area for more continuation towards the downside, or what I'll be looking for is a break above with displacement, a retest of this key area for that continued pushback towards the upside. So let's play out the tape. So you can see right here, we're finally getting that break back towards the upside. We have a lot of displacement. You can see we have a daily candle closure as well. So now what we're going to be looking for is the retest of our 570 for that continued push back towards the upside. So now we can go into the lower time frames. So right here, you can see we have that big push towards the upside with displacement. Now we're looking for the retest of this key area. You can see we're tapping it in the pre-market. So what we want to see is a hold of this 574 for that continued push back towards the upside. So you can see right there, price tapped in towards our 574. That's our key area. You can see we have a 5-minute candle confirmation as well. That's where we can look to go long with a stop at low of day. And now we can target a 1 to 2 back towards the upside. In this case, it basically coincides with your pre-market high and your previous day highs as well. So we can mark this out. Now we can play the tape. And as you can see right there, price ended up having a nice move back towards our pre-market highs and our previous day highs for a nice win on SPY. So I hope you guys enjoyed that video. If you did, I appreciate it if you guys drop me a like and sub. Also, if you want to follow for more live market updates, make sure to follow my Twitter and my Instagram in the link in the description below. And I'll see you guys next week for a brand new video. Peace.